You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And we've got a couple of interviews today that I think you're going to find very enlightening. My friend Peter Tapling from PTAP Advisors will be talking with us about open banking and instant payments and a lot of the other top drawer topics that popped up at the Nacha Payments Conference recently. And then our friend Ann Legg from Thrive Financial Services will be sharing some thoughts about credit unions' readiness for implementing generative AI. As always, you can find out more about the Best Innovation Group by checking out our website, big-fintech.com. You'll find all kinds of good stuff there. And if you happen to be listening to this episode right when we post it, you still have an opportunity to join us live for our bi-weekly town hall. That will be taking place on Wednesday afternoon, May 22nd, 3 p.m. Eastern, noon Pacific. You can find out more information and request registration credentials at cutownhall.com. There is no cost to attend, but you do need to register in advance so you can get the Zoom link, etc. Always a great conversation, an interactive conversation featuring our Grand Poobah John Best, talking about the latest top of mind issues that are affecting the credit union world. Not sure what he's going to be talking about on Wednesday, but there is so much going on right now that I'm guessing he'll probably wind up getting into ChatGPT in the latest release. More about that in just a second as well. But first, as I said, this is one of those weeks where there was just no shortage of news. Who among us had Clarence Thomas writing the Supreme Court opinion that would affirm the right for the CFPB to exist on their bingo card? Didn't see that one coming, but I think we mostly probably saw the result coming. This was the case that actually questioned the funding mechanism for the CFPB and whether it was constitutional. I think most people thought that it was always a long shot case. It would have had some pretty significant ramifications, not just on the CFPB and all past rulings if it had actually passed muster, but I think it would have had a lot of collateral damage around some of the other government agencies too. Because of that, I don't know, maybe it's not the reason, but it was rejected by a 7-2 margin, which means that yes, the CFPB will continue to exist, and it's okay to fund it the way it goes through the Federal Reserve's, drawing its funding from the surplus mechanisms of the Federal Reserve. 7-2 vote on that one with some kind of strange bedfellows, I would say, particularly as I mentioned, Clarence Thomas doing the majority opinion. There were multiple concurring opinions, though, which is always interesting, which says that even if people could agree on some aspects of it, they didn't agree across the board. Therefore, I have not dug into those concurring opinions. Whether or not that leaves the door open for other future types of situations and challenges, etc., we'll have to see. And then the dissenting opinions, which were fairly strong, it was written by Samuel Alito and joined by Richard Gorsuch. So interesting stuff there. A couple things. One, remember this all started with a challenge to a payday lending rule that was issued by the CFPB back, I think it was 2017, if I'm not mistaken. It may have been more recent than that. But I think that's also a reminder. I don't think too many of us want to stand up and defend payday lending and usurious rates around those. So there is good stuff that the CFPB is doing. I think this kind of puts the focus back on trying to influence more reasonable actions coming out of the CFPB rather than this kind of scorched earth policy in terms of going after them this way. The dissenting opinions talked about unchecked balance of power and how they can do whatever they want. That's a bit of an exaggeration if you actually look at the details. The Supreme Court also, just a couple of years ago, during the Trump administration, made the ruling that the president can replace the head of the CFPB, which was not the case when it was originally set up. It was supposed to be insulated from that type of oversight from the executive branch for reasons that I think we're seeing. So that's an interesting one. So that can still happen. So, I mean, the change of administration, the change in the focus of the CFPB can be pretty much implemented quickly. And as we saw from the last time the Trump administration was in power, the one strategy could just be to cut the budget. If the head of the CFPB doesn't ask for funding, the scope of the mission can drop dramatically pretty quickly. So, the CFPB ain't going away. That's the bottom line. I think we all have plenty of things that we're working on that are both sources of frustration as well as things that I think they can help constructively, like open banking that we'll be talking about in just a bit. So, just one more chapter in the never-ending saga of the CFPB, kind of coming to a temporary conclusion this week. The other big one that came up this week was the launch of ChatGPT 4.0. I think that technically was out by the time we spoke last week, but a lot more information on it now, including the release, the actual event, and the stage performance of OpenAI by demonstrating it. Kevin Roose, the New York Times reporter, actually covered that, and I'll post a link to his I don't know if I call it a review, opinion piece, whatever you want to call it. You may remember his name. He was the one that in the last go round when OpenAI and ChatGPT went live and was available to the public, he had the extended conversation where via his text communication, he basically had ChatGPT trying to tell him to leave his wife and pair up with the person speaking, the person quote unquote speaking behind ChatGPT, which caused a bit of controversy, I guess I'd say. Well, now you've kind of upped the ante on that with voice and the coverage of the launch. I mean, and that you can choose which voice you want to use in that. One of them is a rather sultry female voice that they gave the name Sky to. And he focused on the way people were already interacting and kind of relating to that voice. We've mentioned this going back. I have to go back and see how far back we actually made this comparison. Don't forget the movie Her. And I went back and checked. 2013. It's an 11-year-old movie. Talk about art kind of getting the jump on real life. And now that one's getting back right into the headlines because the whole idea was this chatbot that basically a lonely man winds up falling in love with, played by Joaquin Phoenix. The voice was played by Scarlett Johansson. Now, after the reporting and some of the controversy around this latest round, OpenAI has announced that they are shelving at least this sultry voice, Sky. And as of last night, just before I'm recording this, Scarlett Johansson is now threatening legal action because, according to her, they actually approached her to see if she would be willing to voice the voice of Sky. She said no, and they went and came up with an imitation of her voice anyway. Which again reminds me, as always, back into the world of music, about the parallel to Tom Waits, who Frito-Lay wanted him to do a commercial for their chips. And they approached him, and he said no. And they went and they made a caricature of Tom Waits, and they made a guy sound like Tom Waits, and they did a whole campaign around it. And he sued them. And he won a couple $1 million. And they paid his legal fees, too. This was back in 1990. The world's changed enough. If Scarlett Johansson decides to go with something similar to that, 34 years forward, I wonder if that conclusion of the courts would be the same. So another really interesting one, and as I said before, I'm sure John Best is going to have more to say about this, maybe even on the town hall this week. But I'm sure we'll be having more conversations on this one. And again, this is nothing to say that there's a problem with pursuing generative AI. There are lots of good applications. This is the kind of thing that gets it into the public consciousness, though, both from an idea of understanding what it can accomplish and also potentially giving it a bad reputation. So it's an interesting one to follow along with. Anyway, I've gone on long enough. Let's get back to the main attraction. Peter Tapling from PTAP Advisors was right at the center of a lot of the key Nacha Payments conversations at the conference a couple of weeks ago. Open banking was one of my favorites on that. There were a lot of conflicting messages around that one. You saw some sessions that said it's the greatest thing since sliced bread. A couple others who said, it really wasn't what it was cracked up to be in its implementation in the UK and EU. So I thought, what better person to kind of get more of the details on that one? Peter's always one of the most insightful people in the space to talk to. And also got into a little bit of a conversation around instant payments as well. He's an active participant in the U.S. Faster Payments Council. So with no further ado, let's have a listen to what Peter and I had to go into on those two topics. I'm here with Peter Tapling, the managing director of PTAP Advisory, a busy and I think a little bit tired man right now. He just spent, we saw each other down in Miami at Nacha Payments. And Peter, I think you had a session each of the 3 days that the conference was going on that you were on the panel.
Each of the 4 days. My last session was one of the last sessions of the conference. So I just got back last night. I am a little hoarse this morning.
Hey, you're coming through loud and clear. I want to particularly focus on some of your comments. As always, you've got great comments and insights, but around open banking in particular, and then kind of also in the faster payment space, which I know you spend a lot of time with the U.S. Faster Payments Council and whatnot. Just kind of want to follow up with you on some of those things. You made a great comment that, we don't have open banking in the US in the sense that the term was originally intended, at least with regard to the way it was rolled out in the UK. Can you maybe say a little bit about, and obviously we're, especially with Section 1033 and the new CFPB rules, we're probably starting to put some specificity around it now, but how do you see that playing out?
Yes, so in the UK particularly, and also in the EU, open banking is regulated. There are regulatory organizations that are developing APIs and putting mandates on financial institutions that they use the exact same APIs. And here in the US, we've had APIs available from financial institutions. You can go to api.pickyourfavoritefinancialinstitution.com, and you will likely find a host of application programming interfaces that support certain functions. The difference is they're all different. So if you wanted to do a balance inquiry API, it's going to be different at a big blue bank than it might be at a big red bank, as an example. And so when you hear the term open banking in the US, it's generally a service provider, not a financial institution. And that service provider is somehow reaching into the banking universe. And there's a variety of ways that's done, and that's probably another podcast. But it's the difference between, it's two major differences. Well, I guess three. One, the APIs are legislated more or less in Europe, as opposed to here where they're vendor specific. The second one is that there's a mandate that the financial institutions must provide these things for a purpose. And I guess the third thing is, open banking over the US or over the UK EU was really focused on account switching, a consumer being able to say, hey, I'm at Lloyd's TSB, but I would like to be at HSBC. And when I hit a button, I want to be able to move all of my relationships. I want my direct deposits and my bill pays and my P2Ps and EIEIOs, like whatever other services I have. And here in the US, open banking is really more about enabling the front end service and reaching back into the banking universe to get the information that's necessary in order for that new front end service to be issued.
I've seen in the, kind of reading between the lines, and I think I've heard in some of the public statements, there is some of that aspiration of account portability. I've heard the comparison to cell phone numbers and things like that. But yeah, I mean, that doesn't seem to be the front and centerpiece. And even in the UK, as you and I were talking, I think your colleague on the panel made the comment that by that standard, the European rollout has not been all that successful, right?
Yeah, well, I wouldn't say it's not successful. It's successful. It works. It's there. But that idea of consumers are just going to wake up on a Tuesday and decide I want to be at a new bank by 2:00 in the afternoon just hasn't happened. It does happen.
Fair point. It
does happen. And Leo Lippis brought up in the panel that more people get divorced each year in the UK than actually use account switching to switch. And his quippish line at the end is evidently they don't like their spouses more than they don't like their banks.
Which is pretty remarkable when you think, and I guess you could argue this one both ways too. There are far fewer alternatives in the UK as opposed to the US, where you've got 10,000 financial institutions between banks and credit unions. You've got
the US has by far the most, let's call it, robust banking ecosystem on the planet,
which adds to the complexity. And as you point out, and that's part of the push around open banking, is to harmonize that to some extent. And then also, as we also talked about, you're never going to see a true mandate. In the US, we just don't work that way. But if the regulators require you to open up the portal so that you can actually get to this information, as you say, it's happening plenty of times here already, just not in a standardized fashion. Is that a fair?
Yeah, there's a fine line between mandate and strongly encourage. Yeah. So you mentioned Dodd-Frank 1033. Let's remember Dodd-Frank started after the 2008 crisis. It became a law in 2010. So here we are in 2024 talking about section 1023, of which, the first paragraph, the meaty part, is maybe 2 sentences, right? But what that 2 sentences says gets to the heart of what open banking as defined in the EU and the UK was attempting to accomplish. That the information and the data that a financial institution holds on behalf of a consumer belongs to the consumer, and it does not belong to the financial institution. And if the consumer says, I want all this information and I want you to make it available to this party, that should happen. And so it's not, 1033 is definitely not there's no Swagger specification for an API in there. It's not very prescriptive. And so the work that the CFPB has been doing is to say, well, this thing is in a law. It has tasked the Bureau with making this data portability a thing. And so now that's coming to roost. And when people look at Dodd-Frank 1033 and what the CFPB is doing, and they're like, hey, 2024, how come we've not heard about this before? I saw a slide given by a representative from the CFPB of the activities that they've had related to 1033, and it dates all the way back to 2015-16, where they opened up public comment about things like this.
Yeah, it's certainly not new. I totally agree with that. And I guess, kind of the storming, norming, performing kind of thing. Like you say, now it becomes a matter, okay, if 10,000 institutions and countless fintechs are going to do this, we're going to have some consistency. I mean, it's one thing if Chase or Bank of America or Wells opens up and says, here, we got a ready market. Here are the APIs, go at it. It doesn't quite work that way when you have to do with the other 9,900. So it'll.
And I mean, the ecosystem here is that most financial institutions, most US consumers can name maybe 25 banks. You get to bank number 50 and you're under $100 billion in assets.
That'd be a fun test. I'd love to see how many. Yeah, name all the banks you can name. Boom, that'd be fun.
Yeah, I know. That's another podcast. Okay, so we got 2 more podcasts coming up. Right? But the bottom line is, 9,000 banks really rely heavily on their service providers, and so the way this is going to happen is much the way that instant payments rollouts is going to happen. The service providers need to get on board. They need to get everything implemented. They have a business, right? They need to create a way that they can package and deliver and make this stuff available to their customers. And then one by one, they have to go sell the customer because there is an economic model here and people are going to have to pay. And eventually, we'll get everybody on board. I'm bullish on instant payments. I think eventually we will have broad ubiquity for instant payments, 9,000 plus financial institutions.
Yeah,
but
I want to come back to that.
Take time.
I want to come back to that one in a second. But one more thing on the open banking piece that you made a comment I really liked was, a lot of this, tends to be a perception that the banks feel that this is being done to them as opposed to with them. And you made the comment, if you want to prepare for open banking, the best way to do that is to treat your customers better, because the door swings both ways. You can bring customers.
Exactly. So, and again, that comment was focused on this idea of account switching. Yeah. And, people switch. I don't know if you've had to switch a bank account, but yes, we don't have open banking, but it's a pain in the butt. Like it's just, there's a reason people don't do it.
You keep the other one open for 4, 5, 6 months, which if you've got the financial wherewithal, it's doable. But if you're living paycheck to paycheck, good luck.
Exactly. And so the treat your customers better comment is that if you are giving your customer the services they want and you have a nice mobile app, you have a nice website, they're able to get car loans, mortgages, credit cards, the things that they want in their financial lives, there's no reason for them to move. And there are very few individuals who want to move just for the sake of moving. In the mobile phone space, because the telephone number itself is the thing that anchors you and me, it's a much easier switch. So the account doing an analogy between bank account switching and telephone number portability is, on one level valid, but on the other level, the telephone relationship doesn't go near as deep as the banking relationship.
That's a fair point. Yeah, and I think the instant payment thing is clearly kind of like on the periphery. It clearly the two interrelate to a great extent. But you made a really good point that it's been about a dozen years that for the most part we've been internally focused and just getting the rails up and running. And now we're up to the point where, okay, they're there. You got RTP, you got FedNow, and now it's a matter of building those applications on top of it. So, anybody who thought that, the volume was just going to pour in on day one was probably not really thinking through the timeline here. But like you, I'm very optimistic, but it's probably not a 2024 event that we're going to see just,
well, stuff will happen in 2024. Now, the ACH network is now 50 years old, came out in 1974. I don't think direct deposit was a thing until 79 or 80. And so until direct deposit happened, we had the same issues with the ACH network. Banks weren't required to join. And so as a result, there was an adoption curve. You look at the ACH today, and it's kind of the most ubiquitous bank-to-bank way to move money, certainly domestically. And so, that took 4 years and an event, a thing, right? Yeah. Direct deposit. Social Security says they're going to deliver your paycheck via this way. Well, gee, now as a bank, I really got to get on board. But let's unpack that a little bit. What is direct deposit? Direct deposit is a product. It's a product that's sat on top of the rail. It's not the rail itself. Good and point. So that's the ramp that I'm on. Financial institutions keep looking in at the clearinghouse who runs the RTP network and the Fed that runs the FedNow network and saying, hey, give me the use cases, give me the use cases, give me the use cases. That's not the way rails work.
That's not your job.
They just laid a big water main under the street. You now have to go build houses, and those houses have to have pipes, and those pipes have to have spigots. So start building applications.
Makes sense. And as you said, we got a couple more coming. We got a few more podcasts I think we can make out of this one. But in the meantime, always great stuff, Peter. And if people want to get in touch with you, what's the best way to do that?
PTAP Advisory. You can find me on LinkedIn, Peter Tapling. I do have a website, but it's not very good. You can always send me an email, peter@ptapadvisory.com. Thank you.
Peter Tapling, thanks so much.
I'll also add that I wrote a blog for America's Credit Unions, who happen to be one of the sponsors of the Bigcast, and we always thank them for their support. I'll post a link to that, capturing some of what I thought were the highlights of the conference, and specifically getting into some of the details of the conversations around instant payments and open banking. So if you'd like to check that out, you can always find the show notes. We've got a bunch of links to some of the interesting stuff that I think's popped up, including the Supreme Court decision on the CFPB, and the coverage in the New York Times around the launch of the Chat GPT 4.0, the O standing for Omni. So you should be able to find those at the website, big-fintech.com, under the media tab, if you're not there already. I believe they should also be very easily visible wherever you are listening to your podcast, Spotify, Apple Music, etc. As I mentioned, we have the town hall coming up tomorrow, but in the last town hall, our friend Ann Legg from Thrive Financial Services joined us and dug in a little bit deeper. This was her second visit talking about credit unions' level of readiness for implementing generative AI. And again, it's an interesting conversation from the standpoint that it can be used in a lot of very constructive ways and has to be really integrated properly to actually have its full benefit for both the back office as well as the member base. This is part of a longer conversation that took place on the town hall, but I think it gives you a flavor of what we're talking about. Let's hear what Ann Legg had to say about generative AI.
And let's just take 2 steps back. Many of us are already using AI in a variety of different things. Many of us are already using AI in our lending. We're really talking about here, how do we understand generative AI and the future state it's going to give? And I think the big piece here is it's going to give us a future that really we might possibly not even be able to imagine. John does a wonderful job of helping us understand our future state, but for many of us, it's like, I want to get there, but I'm not exactly sure how. So we have to be really mindful of how we do this. I want to talk about it in 3 words that really help us kind of level set the language. The first one is, what will be AI's impact on the members? What will it be on our credit union mission? And what will it be on our margin? very kind of really good ways to just level set. So on our members, clearly this will help us not only deeper understand, but possibly create new products, new services, new experiences that really at the end of it are going to give us competitive advantage. I mean, talk about playing field. We already rock what we do because we're mission-based financial institutions, but just imagine what we can do as we can go to scale on that. So then obviously from the mission perspective, again, being mission-based financial institutions, we now can deliver customized, tailored guidance, holy smokes, wherever and whenever to everyone. We've been struggling with that for a long time. And think about the ability of saying, hey, member, I understand that you've been doing buy now, pay later, and you actually don't have the funds for that. Let's figure out how we help you automate that so you can stop and get out of this situation. Ooh, what's another one? Hey, you might be in an environment where that cost of housing is obscene. I don't know, that's kind of how it feels like here in Southern California. So you might even have rent increases and maybe mortgage payments that are increasing. How do we help you get in front of it? All of that goodness. Clearly, we have to drive something from the, from the financial perspective. We can start being leading economies of scale. We can achieve more with the people we have. I don't know about you, but the war on talent has felt crazy pants. And yes, and that's a technical term. So how do we get more from what we have? We can start really building in productivity and efficiency. This will help us with the competition and the competitive advantage, as well as identifying new sources of revenue. All right, so kind of that's cool, Anne, but lead me in a little bit further. Okay.
So, Anne, that was something that was highly discussed at our Innovation Club was the death of NIM, right?
Yeah.
And the idea, I think it was Vibrant Credit. I don't think Pete's on here, but
yes,
they were the ones that were, they're selling coffee and sandwiches. And, just a question though, that was something I was thinking about with regard to what you're doing here. It was fascinating to me to think about, how that's going to work, because presumably you're going to get past sort of the first stage scenario and of, well, we're doing it and it's working, to where you're trying to squeeze margin even out of coffee and sandwiches, right? And it seems like, this is going to be a big part of it, right? This sort of approach.
Huge. Let's anchor on exactly what you talked about there, John. What we want to be thinking about is how do we operationalize so we can productize, so we can monetize. And John, let's go back in time with you. One of the things you realized right away is, hey, I can create a new home banking system, and then how do I sell that to everybody else?
Right.
Think about it on that smaller scale. What if there's something that I create? What if it's something that's powerful that, whoa, that is actually something other credit unions need? Or it's something else we do, right? I mean, we're talking about what ifs, but 100%, we don't really think about how do we, really operationalize and productize and monetize.
Yeah.
Yeah, we don't. We have to.
It's not something that's sort of built into us, because those are all related to sales.
Yes, as well as how a technology startup thinks about that is their pitch. I have to optimize, I have to productize, and I have to monetize because I'm going to do an ask. And we don't think about it that way.
No, we're far more, but we do think far more ahead than them with regard to service. We can marry these two together. We're way ahead of the game.
Okay, so speaking of that, let me show some technologies that do exactly that. So from our members' perspective, we want to be thinking about chatbots, virtual assistants, intelligent contact centers, personalization, content moderation. Those are all easy pieces. Those are things that we kind of were dancing around earlier. From the mission, conversational search, virtual advisors, text summarization. Wouldn't it be cool that your board report, and you're going through it, and instead of having to go through all the pages, you could literally narrative and say, so how much money did we make? How much money did we lose? What does that look like? Let me understand the board report from a narrative experience as opposed to from this page flipping experience we may already have. Holy smokes, having a whole conversational search on just our board report as we're talking with the board. Think about the different dynamic insights you'd get. Clearly we're talking about processing, obviously, automation, productivity, quality control, visual inspection. I mean, synthetic data training. I mean, these are things that can help us very, very quickly move forward, but we have to think about it in ways that is essential to us. And John just mentioned, we can't be thinking about it in sort of the ways we used to, right? Oh, it's sort of a linear progression. No, 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 no. This is faster. This is different. And this is an actual asset, not only to solve the problem we have today, but potentially to build something we may sell or have future value. We don't really think about having the ability to build for future value. And that's exactly what AI, generative AI specifically, is giving us the opportunity to do. So let's talk through some of the things you need to be thinking about as you do this. So first of all, you got to have a strategy. You definitely need to figure out what are those success metrics, because we're at a spot where if we're going to go in this, we have to definitely have some space on what business problem is this going to solve? How am I measuring my success? How am I bringing up literacy within my organization? And also, how am I managing for risk and quality? So these are huge, and we have to be very, very, very mindful that that's what we're talking about. Now, this should align up to a data strategy you already have, or if not, it should line up to your organizational strategy, right? We're all trying to grow. We're trying to find new opportunities. John mentioned about how we're handling, the NIM issue. These are all things we are struggling with. So how are we going to add AI to that? Well, what is the strategy? What do we want to be doing? How do we identify the success metrics? How do we cultivate our culture? How do we have these questions? And that's what we should be having the questions on, as opposed to which tool. No, let's figure out these pieces first and talk about what we're trying to use the tool for. AI, generative AI, is a tool. It's a little bit like a microwave. Hey, if I say I want to be able to making the most amazing Michelin 5-star restaurant meal, I'm not going to be buying a microwave. I need a kitchen and probably a chef. But if I'm saying, you know what, I want to get a decent meal prepared and I want to be able to do it in 10 minutes or less, maybe the microwave is the tool I need. If I talk about what I'm trying to do first, this will help me identify the best solution. It is so easy, so beautifully easy to get sideswiped by all the cool tools we have. I mean, heck, I loved being at the Innovation Club, where I just sat there and pretty much was just in awe and felt like a kid in a candy store. But then I have to step back and go, okay, what am I going to use that for, right? So let's walk through, strategy. What do you need to be thinking about? Well, clearly it's your current condition. Again, why? What is your why? Why are you considering it? What's the problem that you're looking for? Hey, part of this is we're going to get a lot of insight from this, 100%. So how literate is our credit union to be able to take that? What about risk? We really have to be mindful this is risky on a couple ways. And how do we manage quality? John gave a really good example earlier of saying, hey, what if I do this? And what if I find out the data's not good? Or what if I find out that this isn't good? I'm gonna have to go back. Many times we build it and we don't realize it is a beautiful data feedback loop. We're creating something so that we're continually helping to improve it and make it better. And it might even be not this iteration, but something else we find in the next iteration. So we have to be mindful of all these pieces. I know you guys, a few of you are on chat. I'd love to hear for just a minute, what are the problems that you're having right now? What are you looking to solve? And ideally, AI. Fraud, yes. Oh my gosh, John, 100%. Fraud is outrageous, especially as we were talking about with deepfakes, with it. John, what is the amount of time you need to be able to imitate my voice? Isn't it just insanely low?
Yeah, it's like 2 minutes now, maybe less. I could get less than 2 minutes of you talking, which I just did because we're recording this.
Exactly.
And I could be you pretty quickly. As a matter of fact, that's the medium right now. But the worst part is not only with what I have from video from you, I could impersonate you on the Zoom call.
And this is a case, as I said, this was just an excerpt of what was close to an hour-long conversation with Anne. If you would like to see the whole thing, again, we will have that link posted at the within our show notes to this episode. But you can also just go out to cutownhall.com and you'll find that listed among the past episodes or sessions that you can go back and watch. And in my mind, this one is one where the visuals are even more important than usual. These are Zoom calls, and you can actually see, and Anne presented some slides where some of the things she was rattling off about the different factors to consider are laid out nicely there for you in one place where you can see that. She also made mention to something else that I thought was very cool about the idea of selling coffee and sandwiches. That was a reference to Anne was also a participant in Best Innovation Group's Innovation Club, which met in person recently in the month of April. And we had a conversation also with Pete Nolte from Vibrant Credit Union out in the Quad Cities around Illinois and Iowa. And one of the things they've done is really, kind of taken, for lack of a better way of putting it, the Capital One Cafe concept, and really changed the nature of their branches into community centers, cafes that happen to have financial availability, counseling, interactive teller machines, people roving the room that can help as you need. We got into an interesting conversation about that one. I was kind of joking. It's like, wow, that sounds like a non-interest income. Which unfortunately, taking this full circle back to the earlier part of the conversation, fee income, which tends to trip a trigger sometime with the folks. But Pete pointed out very correctly that that's not the case in terms of the way their call reports would look, because these coffee houses, cafes are actually structured as a QSO. So it really just shows up as a QSO revenue stream on the actual call report. But anyway, it's interesting stuff. We should have another broader conversation with Pete about that sometime. But again, if you're interested, the Innovation Club is a great way to get involved and really make your R&D dollars stretch by kind of syndicating them across the board with other like-minded credit unions, kind of thinking through these tough ideas. Website, big-fintech.com. There's a drop-down for the Innovation Club. You can find out more about it there. And it gets into all those kind of conversations, as Anne was covering here, that I really kind of resonated with me. The notion of figuring out how to strike the balance between member service and the implementation side and productization of generative AI. With that, another episode of the Big Cast in the books. We're going to be taking a break next week. Have a happy holiday weekend for Memorial Day. I'm sure a lot of people are taking a little bit of an extended holiday, so we will be doing the same. We will not have a new episode this coming Tuesday on the 28th, I believe. But we will be back the following week. I believe I know what we've got in store for you already, but I'll leave the suspense at that one. Until then, you can always track down more about us at the website, big-fintech.com. At the media tab, if you want to go back and check out some of our past episodes, you have more than enough to dig into there, including some great conversations, also from Nacha Payments and some of the other experts that we've spoken to in the recent past weeks. You can find out more about the Best Innovation Group as well by following our Grand Poobah, John Best, or the Best Innovation Group itself on LinkedIn or X, Blue Sky as well. At JB FinTech is John's handle. At Big FinTech is the Best Innovation Group. Mine is 154 Advisors, at 154 Advisors. Again, my name is Glenn Sarvati. Always happy to be working with John and the Best Innovation Group team. As always, we thank you so much for listening. We hope you get something out of this. Feel free to share your thoughts with us in the comments field or just by dropping us a note. Via the website, via X, wherever you would like to try to get in touch with us, I bet you can find us. Thanks a lot.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech. Email info@big-fintech.com. Or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.